All right, let's dive into one of the most powerful and honestly, one of the most common formations you're ever going to see on a chart, the triangle pattern. This simple little shape can actually signal some of the market's biggest moves. And today, we're going to break down exactly how you can trade it.
I mean, think about it. What if you could literally see a major fight brewing between the buyers and the sellers right there on your screen? And what if you knew exactly how to set yourself up to profit from it, no matter who wins? Well, that's the real power of the triangle pattern, and that's exactly what we're going to decode today.
So, what even is a triangle chart pattern? At its core, it's a picture of that very battle. It shows a period of consolidation where the price action gets squeezed into a tighter and tighter range. You can almost think of it like the market coiling up like a spring, just building up all this energy for its next huge move.
Now, there are three main flavors of these triangle formations, but here's the best part. We're going to focus on a single, powerful strategy that you can use on all of them. It's a really simple and effective approach that totally removes the need to guess which way the market's going to break. Okay, first up, we have what I like to call the symmetrical stalemate. And just like the name says, this is the classic picture of market indecision, where neither the buyers nor the sellers have the upper hand. It's a total standoff. So a symmetrical triangle is, well, it's defined by its pure symmetry, right? It's formed by these two converging trend lines. You've got the sellers creating lower highs, kind of pushing down, while at the same time, the buyers are creating higher lows, pushing up. The price is literally getting squeezed from both sides. In this kind of situation, nobody is in control. It's a complete draw. But this period of quiet, this little truce, it's telling us something really important. A breakout is getting close. All that built-up energy has to go somewhere.
And here it is. This is the payoff we're waiting for. When one side finally gives in and the price bursts out of that triangle, all that pent-up energy gets released. The result is often a really sharp, really dramatic surge in price.
So how do you trade this? Well, the strategy is actually way simpler than you might think. You place two separate entry orders, one to buy just above that descending line of lower highs, and another one to sell just below the ascending line of higher lows. Then, as soon as the breakout triggers one of your orders, you just cancel the other one. See? This way, you're ready to go no matter which side wins the fight. Next up, we've got the ascending assaults. Now here, the balance of power starts to shift a little bit, and it tells a slightly different story of building pressure. Visually, an ascending triangle has this flat, horizontal resistance level at the top. It's like a price ceiling that the sellers are defending. But underneath it, you see this rising slope of higher lows. And this shows that the buyers are getting more and more aggressive, pushing up against that ceiling with more and more force. So the story that's unfolding here is all about building pressure. You can see the buyers are clearly gaining strength, and they just keep testing that resistance level over and over. A breakout feels totally inevitable, but the big question is still there. Are the buyers finally going to smash through, or is the seller's defense going to prove too strong? Now, most trading books will tell you this pattern usually breaks to the upside. But look what happened here. The buyers lost the battle. That resistance was just too strong, and the price completely collapsed, diving downwards. This is a perfect example of why trying to predict the outcome can be so dangerous. So, how would our universal strategy have handled this little surprise? Well, by setting an entry order to buy above the flat resistance and another one to sell below that rising support, you would have been totally prepared for either outcome. Your sell order would have triggered, and you would have caught that unexpected dive perfectly. Okay, on to our final pattern, the descending pressure. And as you're about to see, this is pretty much the mirror image of the ascending assault, but this time it's the sellers who are on the attack. As you can probably guess, a descending triangle has a flat support level at the bottom. Think of it as a price floor that the buyers are desperately trying to defend. But pushing down from above, you've got this descending line of lower highs. This shows that the sellers are gaining momentum and are just applying more and more pressure. So the narrative here is that the sellers are slowly backing the buyers into a corner, right up against that support floor. And yeah, most of the time, that floor will eventually break, and the price is going to fall. But as we've already learned, you can never, ever assume. Whoa, look at that. The support line held. In a really surprising turn of events, the buyers mounted this huge counterattack. They didn't just defend the support level, they pushed the price all the way up through the top of the triangle. Just a massive, unexpected reversal.
And guess what? Our simple trading plan handles this reversal just as beautifully. By placing an entry order to buy above the falling resistance and another to sell below the flat support, your buy order would have captured that powerful, unexpected surge to the upside. It just works.
So we've just walked through 3 different patterns, and each one had a surprising outcome. Let's pull it all together now, because there's one powerful, universal idea that really ties them all together. This quote from the source material really says it all. Your goal isn't to be a fortune teller, right? The goal is to be prepared. Stop obsessing over which direction the price is going to go and just start preparing for movement in either direction.
This all comes down to a really crucial shift in your mindset. The old way of thinking is all about prediction. You're trying to guess the future, which, as we've seen, can fail spectacularly. The new mindset is all about preparation. You set your orders on both sides of the pattern and just let the market tell you which way it wants to go. You're ready for anything.
And this is the main takeaway. This one simple strategy, just being prepared for a move in either direction, isn't just for one type of pattern. It applies to all 3, the symmetrical, the ascending, and the descending triangle.
That's it. Just one single, unified strategy to simplify how you approach all of these patterns. It's about removing all the guesswork and just focusing on the one thing you can actually control, your own preparedness for whatever happens next. So now you know how to spot the battle lines being drawn right on your chart. You can see the stalemate, you can see the assaults, and you can see the pressure building. So the only question left is, are you ready for the breakout?